Mavericks. Welcome out to your currency midweek for July 13th, 2022. Corey here with you. Nice to be back with you. As always, a quick reminder to make sure you follow your trading plan. So, some central bank news this week. Bank of Canada, the RBNZ. I mean, we're in rate hiking cycle, and certainly it's moving prices. The inflation numbers this morning came out. Remember that inflation numbers are backward looking because a lot has changed in the past month when you're looking at things from the standpoint of oil prices down 20% over the past month. Just a lot of things have come down. I mean, lumber's down like 60% off of its highs, and even food prices, corn and wheat and soy and so forth, have come down a lot just in the past month. So I think the market realizes that, yeah, the headline numbers, I mean, we talked about this last night. The headline number was going to be pretty high at 9+% annualized, but the market should digest that pretty well, knowing that, hey, if they were to take the numbers based on what's recently happened, it would actually be back down in the eights and so forth, and actually be declining nicely. So we're backing up, but it's still way too high. I mean, even if inflation was at 7%, you'd go, well, that's way too high. The Fed wants it at 2. Um, you think about a 9% inflation, that's a pretty ugly number. If you were, I saw a stat today that if you were paid at your job a steady amount monthly, at a 9% inflation, you're basically working 1 month out of the year for free. Because remember that inflation's eroding, and it's kind of like compounding interest. It's eroding against you. So it basically steals away about 1 month of your work, 1 month worth of your salary. It's not great. US dollar has been on a huge run, but I think we've probably reached a short-term peak. I wouldn't say that the dollar's done necessarily, but we can move a little more risk on. I think it's counterintuitive, but the CPI this headline should kind of act as a sentiment extreme. Remember, we've been seeing consumer confidence at like 50-year lows, and the consumer and just pessimism and negativity out there. This headline kind of helps that, and I feel like it's a flush out of sorts. I'm going to look a little bit more risk on. The last few weeks, certainly we've talked about US dollar and how the Euro USD is headed towards parity, and we've talked about the Swiss franc, and we've talked about the yen even being, something you got to be careful with because it could easily have a nice rally, and it's bounced. But I think I want to flip the switch a little bit. I look at today as kind of an important flip. I'm very interested in a more risk-on approach. Long Aussie, long CAD, long Kiwi, a little bit more aggressive. I suspect, it sounds crazy, but I think that the stock market may go on a nice, sharp, steep rally here for a couple of weeks. So, as always, the market will grade your analysis, and it will tell you whether you're right or wrong based on its price action and based on the P&L of your trades. But I think that's where we're headed. Most commodities have plunged, like we talked about. Energy has gone down. We talked about the problem for gold, not only rates spiking, but US dollar spiking. Well, look at what's happening today in gold. If you look at a chart, it's just been on this free fall to the downside, and today it's staging a big reversal. Gapped lower, trading higher, bullish engulfing formation. Again, I think that speaks to both that the US dollar's kind of reached a little bit of an exhaustion high, and the gold is, in this case, I'm going to look at it as a little bit more of a risk-on asset. It was doing better when rates were low. It does better when rates come down, and I think that's where we're headed as well. I think rates are going to back up for a while. So we've got this little window, this little pocket. A lot of people will be worried about the Fed meeting and so forth. I think we rally into that. So let's let's not get too crazy on this. But if the market starts to work in that favor, I think we want to continue to look at that more and more. As we said, the RBNZ, they raised by 50 basis points. Bank of Canada was only expected to raise by 75, and they came out with a full 1% hike, 100 basis points versus the 75 that were expected. CPI, too elevated everywhere across the board, but that's not a major shock and surprise. You know, we knew that it was going to be somewhat elevated. And then U.S. ISM services um, beating expectations. And actually, I think that might be, I don't think that was actually a number. That might have snuck in from last week. So I think I'll cross that one out because I think that's last week number that we didn't catch. All right, let's look at things here. So crypto markets, I mean, continue to plunge. Bitcoin, we've talked about. Bitcoin is in this nice range. I mean, it's a somewhat perfect range between 22,000 and 18,000. And it's bounced off of those levels a couple of different times. In fact, we just went up to 22 and turned back down and went back to 18 as you know, so it's kind of in this nice range between basically those levels. But you can see that the most recent move is back down to the bottom of the range. In FX land, we know the dollar and the Swiss franc have been strong. That continues, but I think we want to flip the switch, and we'll touch on that more. Weekly performance, pretty ugly. Everything lower, oil down, crypto down, gold with a little bit of a recovery, stocks are down. But below the surface, it's a little bit better, I think, than maybe what it seems. So here's the market. As you look at the S&P, we made our low at the June options expiration cycle and have been in a corrective pattern since. So you can kind of see that A, B, C style correction that we've touched on. So now where do we go? I actually think we're going to break out of this little base and go on a more aggressive run. As you start to break the 50-period moving average, the buying pressure should intensify. Short covering, all those things come into play. Right now, everyone is doubting the rally. If you were to go out and poll 100 people and ask them whether they think buying stocks right now is a good idea or not, they'd say, oh no, it's going to plunge and the market's in trouble and this and that. And so there's all these, there's a lot of pessimism, in other words, out there in regards to the markets. And I think that works in the market's favor. Usually, sentiment, when it gets this extreme, and I would call 50-year lows in consumer sentiment pretty extreme, I want to take the other side of that. I think it presents an opportunity. As you look at the US dollar, here's that reversal we talked about. So this is an outside day. You've got a bearish engulfing that swallows up the prior day's candles. It's just not great price action whatsoever. Now, I don't know that the dollar comes off a lot. I would call this an exhaustion. I would bet that it's just going to stay relatively sideways. I'm not like aggressively shorting the dollar or anything like that, but it gives the market some room. If the dollar's not doing much, gold can rally for a period of time. Some of these other commodity currencies can do okay and have a little bit of a bounce for a period of time. So for this week, mixed picture. CAD with a rally, larger than expected rate increase. Euro continues to trade poorly. Not too much happening here that I think is extra, powerful. Like we talked about with crypto, Bitcoin's in that range. It'll be important kind of sentiment wise for crypto that Bitcoin hold that 18,000 level. If it can't hold at those levels and starts to go to new lows, 17, 16, you're going to see more stress, more liquidations, more problems in that space. So kind of an important zone, I suppose, here that Bitcoin can hold. Now, as we look at things, let's go into a few charts and look at a few other markets. So we talked about the S&P chart. Still in a downtrend, but I'm optimistic. I think we can see a little bit more upside. As we look at some of these others, if we look at the world markets in a low basing kind of formation, but you're either in one of two camps. Either you think support's going to break and we plunge, or you think that we can go back up and start to really go on a run. And I think the risk to reward of playing this to the upside is pretty compelling. So I like it on the long side. I'm going to look to, be a buyer here, and if I'm wrong, I'll lose a little. If I'm right, I feel like I can make quite a bit. Here's a chart of the crypto space, and again, been in a range. This isn't perfectly representative of Bitcoin because it also includes Bitcoin Cash and Ethereum, but you can see that entire crypto market is somewhat in a trading range that way, bouncing between low end and high end of the range. Now, for the rest of this week, there's not, we've kind of crossed the big hurdle, which is CPI. CPI, I think, is the most important aspect of this week's events. It was kind of what everybody was paying most attention to here in the U.S. Tomorrow we get PPI, Producer Price Index, not expected to really change much. GDP out of China tomorrow night. Retail sales out of the U.S. here on Friday morning. So plenty of, headline numbers. We're still going to have to work through some things. The market is saying, okay, big inflation, the Fed's got to be more aggressive and so forth. I get it, but remember that when you're looking at these numbers, I mean, you've got to consider the facts of if all of these input costs have come down quite a bit, well, that's deflationary, right? Oil went down 20%. So you can't say that energy is going to continue to ramp higher. Is it still too high on an inflation basis? Yes, but we're actually kind of seeing that rollover in effect, and it takes some time for the numbers to reflect that. So I think the market's smarter than kind of the headline numbers, and I actually look at this as a positive for risk taking. I could be dead wrong about that, but that's what makes a market and presents that opportunity. So let's come into a few charts. If you have anything you want to look at, feel free to fire away requests, and we will take a look at a few of those. Let's start with just Bitcoin itself. If I come into Bitcoin and look at it, so here's the trading range. Let's mark 22,000 on the chart and mark 18,000-ish levels on the chart. Somewhere it's not 18 to the spot, but 18,000 and change. That was the original plunge. And you can kind of see this trading range area. The most recent ramp, and then this last week, we failed at 22,000. Not a major surprise there, and we've kind of come back towards the bottom of the range. In trading crypto, Bitcoin is obviously the most important aspect of that. It's where, anyone that owns crypto seemingly owns Bitcoin, and then they also like, and they kind of talk about, well, I also like Solana, or I also like Ethereum, or what have you, right? So Bitcoin is kind of the core. It's kind of like the S&P 500 of the crypto space. Well, right now, I'm actually optimistic that crypto can work its way back up and through this range because, again, it's not, I mean, it's a lot of things, but it certainly is not proven to be an inflation hedge or anything like that. I think it's just a risk asset. When risk taking is highest, well, it goes up. When people de-risk, it goes down, right? It's just a risk asset. You can try to make it more than that. It's not proven to be anything more than that. And so I think this is kind of a good spot for it, and it's an aggressive place. And if you really want to go out on the scale of risk, you can get into some of these others that certainly have bigger possibilities on a percentage basis. But you're seeing the same type of reversals here where we've come off of the lows. We made new lows, yet we're pivoting to the upside. Those are called outside days. An outside day is always an important one to kind of pay attention to. When we talk about candlesticks, we talk about size of the candlestick. You can think of like an ATR, average true range. If something moves on average 1 point per day, but today it moved 150. Well, that's 50% more than normal, right? Or it moved 2 points. Well, that's 100% more than normal. That matters. That's something that's telling you there's energy in that market, that today something more significant happened. And that's kind of what an outside reversal is look, it's impactful, it's powerful. Something more significant has occurred. And so if you're looking at outside reversals, I mean, here's an example of one. See how it went to new lows and then recovered to make a new high. It dwarfs, it's completely larger and expanded range and so forth compared to the prior candlestick, which wasn't bad. It wasn't a weak candle, and yet this one outside reversed it. Here's an outside reversal. You see how it went to new highs and then plunged back down. Now, they're often engulfing formations. That's kind of a bearish engulfing where the bearish body swallowed up the bullish. Here's a bullish engulfing where the bullish body swallowed up the prior day's bearishness and so forth. Well, that led to further rallies. This one led to further declines. Here, what do I expect? I expect further rally. Okay, I expect this is an outside reversal. It's something to pay attention to. It's kind of, if you're thinking about it from the standpoint of significance, we have to put a star by that one and say, okay, there's something more happening in this market today than normal. A lot of days are just ho-hum. Some days are impactful, and this is an impactful day. So in looking at it, I mean, most of crypto, and interestingly enough, you'd have to kind of compare it to gold. Gold is acting very similarly, where gold has had an outside reversal. We gap down to new lows. We've reversed higher. We've engulfed the prior couple of days candlesticks and so forth. It's something that has power and momentum behind it. It's impactful. Does it always, is it guarantee success? No, but you want to, from a timing standpoint, if you think that candlesticks can have some power, these are the type of candlesticks that we look for. And it's not just, it's Ethereum, it's Bitcoin, it's Litecoin, and so on. They tend to have the similarities behind them. And so if you wanted to play the higher risk, higher reward game, I actually think it kind of makes sense here to, I haven't advocated certainly for buying a Solana or a Litecoin or something, but man, if there was a time and a place for these things to somewhat shine, this I suppose would be it. Now it's high risk, you're one headline away from a big loss. I get it. That usually in trading, we often say that doing what makes you feel uncomfortable can be a good way to kind of think about trading in general. When everyone else is too afraid to buy, that's usually a buying opportunity. When everyone else is far too afraid to get short, that's probably a shorting opportunity, And I would say that there's a lot of fear and trepidation about the crypto market. So that's kind of interesting to me. Obviously, if you take that same kind of concept and you come in here to, and by the way, that's on the 12-hour charts, but if we turn to dailies, I mean, you're going to see here's gold on the daily chart, or here's, Ethereum on the, well, let's go here. Let me just click on it. On the dailies, you're seeing similar types of reversals on these charts on the daily time frame. So same concept, same principles. Let's look at, let's come into a 4-hour time frame. What I was using yesterday as we were trading the RBNZ statement. I look at this in terms of, I don't want to get short US dollars by any means, but look at what's kind of transpired since the CPI data. And the whole buy the rumor, sell the news, it applies here to US dollars. We've been on an incredible run, and it makes sense to me that it would ramp all the way into this big inflation print. And at that point, you want to lock in your profits. And, I think that's the trade. I think the trade has run its course. It's not to say that, it can't bounce around a little bit, but I think the trade has run its course. And so now what do we do? Well, probably relatively sideways. So I'd much rather look at other things for the next trade and the next opportunity. And for me, that means looking at, the risk on currencies, I think. So the flip side of the US dollar chart is, well, look at what the Kiwi has done. The Kiwi, over that same period where the US dollar reversed lower, Kiwi with a big reversal to the upside. Or CAD. Well, we know CAD had been stronger, but it ramped there in terms of the announcement and so forth that it was going to hike by more than expected. And I still think can work its way higher. Or Aussie, big reversal off of the lows that initially occurred, rallied back up. So I think this is a trade where you can come into the risk on approach, the Aussies and those of the world. So if we're looking at this from the standpoint of pairings, the bigger question to me, I know what I want to buy. The question is, what do I want to short against it? Because in currency land, you always have to pick your favorites, right? What's my favorite bull and what's my favorite to be bearish? And that was pretty obvious for some time as well. I mean, you could kind of just keep shorting the euro for the past few weeks. But the US dollar reached its exhaustion high. I'm going to put the euro in that same camp where, they have, I suspect they have kind of made the easy money and the easy trade to the downside. So could we just stick with the trend and the momentum and so on, keep shorting the euro? Sometimes you do overthink it, but I suspect, again, why is it reversing to the upside? Now, it's a hard one to buy because you're in this, you got a lot of overhead supply. As you try to rally, you got all these people that bought poorly that want their money back, that, a lot of potential for selling. So it's going to be hard for the euro to rally. However, it doesn't mean that, in terms of trading, we can't look at some that kind of are a little bit more correlated to it. And, I would think about the pound. We touched on this one last night, but I still think the pound can have a little bit more downside. If we go to the daily chart, it's been consolidating nicely, and it kind of looks like that tabletop where you bounce the ball and it takes bigger bounces, and then smaller bounces until it kind of falls off the table. So pound, I think, is where I'm going to be looking in terms of the short setup. We're at that support level, and I'm not picking on the UK necessarily, but it's consolidated nicely. It's kind of creating this descending triangle formation and just looks like the next one ready to break and to run and to trend for a little while. So let's look at three pairs specifically. I want to go pound against the three. And so we're going to start. Let's come down here to our pound pairs. We'll go pound Aussie first. So this is your daily chart. Nothing. I mean, it has not moved. This is pound Aussie. It has not moved in months. May, June, July, it's stuck in a range. Nothing on the daily. We come into a little bit shorter time periods and just kind of choppy and sideways. So not ready yet, but, possibilities emerge here. Remember, you're looking to short this. You're looking to short the pound. The expectation basically is that this is going to break to the downside, right? That we're headed back towards here. That's my thesis. And that not only can you go towards there, which would be a great run, that's 268 pips away, but I mean, maybe you can break that level once you get there again. As you look at these other charts, they're still, you can see the trend is rolling over. We're below moving averages. We're below moving averages, but I would still call it choppy. I would still call it somewhat sideways. The risk to reward here that's kind of nice, I guess, is that because you're pressed against the moving averages, it's a low risk trade, and that you've got a stop loss location and an expectation that this thing can work its way lower to the downside. So pound Aussie, one to consider. If I go into the 1 hour chart, that's actually the best setup time frame, I think, where we actually have something. We kind of broke down and then we came back up into that, and we're right against that level. So I was considering, I'm not short yet, but I was even considering getting short, like, within the hour type of thing. I'll see if it pivots here. You'd almost like it to finish like this candle and then start to roll over a little bit to the downside this way, and we can get short that for, I think, a nice trade to the downside. Let's go back to the daily time frame and look at pound CAD. Now this one's a little bit more, has already run. That speaks to the trend that the CAD has been on, right? CAD's been working its way higher, so pound CAD has already broken levels of support back here. But I think the trend persists. I have no reason to believe that this is poised to have some big rally. It looks like a chart that should just keep working its way lower over time. So the daily chart has broken down, 12 hour, there's the support break. The 4 hour chart, a little bit of a low base, a consolidation underneath, again, that support break. And the 1 hour chart, little choppy and whatnot, but ultimately I would expect it to break lower. Last but not least, I wanted to look at pound Kiwi. And this one's similar to the Aussie in that it just really hasn't done anything for a very long time. Multiple months we've been in this range. Good news is you're below the moving averages as expected. That should start to work its way down to the low end of the range again, is my thesis. Come into the 12 hour, choppy but below the moving averages. 4 hours, same thing. 1 hour chart, same concept. And I like the 1 hour charts best for the trade. If I'm looking at pound Kiwi, I can make an argument that you got kind of a trend line in here that just broke 2 hours ago, and you're getting that kind of retest. So I was considering a short here in pound Kiwi, where you basically just, again, play it with a tight stop. Shorting in this area, stop loss up above the trend line, maybe even just above those moving averages, and an expectation that we continue to trend and work our way lower in price. But that to me is the next trade. That's the next one. If you wanted to play something else on the short side versus Aussie or CAD or Kiwi, that seems okay. If we get the rally and some of the things that I'm expecting, there's even the possibility you could trade it against the US dollar or the Swiss franc or the yen, one of those defense currencies. Because if things go risk on, those should have a bit of a struggle for a while. So this is my first area to look at, though. Good stuff. Yeah, I mean, in terms of these trades, I'll probably be short. My guess is I'll probably be short within the next hour. And part of the reason is just, again, I think they're set up for it, and I think today is an important day. Like I said, I kind of putting a star around today's price action. the reversal in crypto. That's an outside reversal. The reversal in gold. The reversal just in general, where you saw things gapping down and everyone's so pessimistic and everyone's so negative. And to me, I don't think that it's the right approach given the way that the data is trending. In the last month, the data has gotten better, not worse, for the economy, for the markets, for risk taking, and so on. So I think that's where we're at, and these are the trades. Yeah, good question. So the request to look at these against the yen. So let's go Kiwi against the yen. You know, here's the 1 hour chart, and it is trending higher. You know, if you want to trade Kiwi yen to the upside, I've kind of had this, you know, nervousness to be shorting the yen, which was the right thing to do. I'm not so sure that the Bank of Japan's going to make a big policy shift, but notice everyone else in the world is. The Bank of Canada just raised by more than expected and such. So it is possible that the Bank of Japan just kind of says, hey, the data is strong enough. We got enough factors here. By the way, inflation in Japan is not as high as it is in other places. They've been battling deflation for a very long time. They've got debt to GDP ratios that are like double other developed economies, though. The US trades at debt to GDP over 100%. Japan trades at debt to GDP of over 200%. I mean, it's just a different market altogether. But yeah, it's a possibility. I think there's just a little added layer of risk there that you have to be careful about with the yen. Here's Aussie yen. You know, again, it is trending that way, so kind of makes sense. And here's CAD yen, which has been the strongest, and certainly on the Bank of Canada news, kind of had that spike. The thing is, I'm going to trade probably Aussie and Kiwi next. I think that's like the trade for me today is short pound Kiwi, short pound Aussie. I'll probably be in those before it's all said and done. So good stuff. All right. On the docket, what do we got scheduled here? Next week, I am doing a class on pivot points right there on the 21st. So we'll talk about, you know, pivot points, even grading the pivots from minors to intermediates to majors, and just some fun stuff with technical analysis. All right, we'll leave it there. Thanks everyone for joining me in the Maverick Currencies midweek. Have a great rest of your week, and we will see you next time. Goodbye, everyone.